Good day everyone, this is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. Asian session live market analysis on June 14th, a fresh week between 5 and 5:30 GMT. So we will just track the market for the third week of this particular month using the live market code page. I'll give the link for the same. You can open it in a browser. I'll focus the camera over that of the live market code page and we will see where exactly the market is. Currently Euro is trading around 1.217375. The low is 1.2109 around that of the Friday close and the high is 1.2207. So a new high has been formed for the week and we find the net change is 62 pips positive. So all along last week they created the bearish wave and induced the traders. Last Monday they just dropped it to 1.1877 and subsequently they gained the levels and all the lower level swings they have purchased or they have bought the positions in Euro and GBP last week and happily they have gained the levels now and they are booking profit. So this is how you find that when the bearish condition is being created in the market, the players are buyers, but they are expecting every other trader to become bearish and sell to them at the lowest level, and subsequently they gain the levels, then the traders become panic and do the short covering. Happily the players are booking profit with such emotional buyers at a higher level. They buy after the rise. So here you come across that net change of 62 pips is seen as a positive gain today for the Asian session, and in the case of GBP 1.4608, 1.4612 are the current levels, 1.4546 is the low, 1.4613 is the high. On Friday you would have noticed that GBP they dropped from that of 1.4750 area to that of 1.45 area, about 250 pips drop as if the market is going to collapse or GBP is going to drop heavily. But they purchased everything and quickly gained the levels this morning during the Japanese session and happily they are holding at a higher level above 1.46. So this is how they play in the market and you find the net change of 59 pips positive. Net change is seen. So we need to understand how the players are trying to trade and accordingly we have to plan our trading rather than simply developing a bearish and a bullish trend does not help us anyway in making money from the other market. We are all here to make money from the other market and in that process we should be able to understand whether we are doing an intraday trade or a position trade, and very few people would have just taken a delivery or taken a position on Friday and now happily holding, sitting on the money. And most of the traders would have just liquidated their long positions on Friday and they will be just blinking why they have gained the levels all along. So this is how they try to create the surprise for that of the traders. The best way to hold the position overnight or over the weekend could be just to keep stop at entry and wait for the position to give the profit. And if the market goes against, then our stop is being filled and we don't lose any money. And that sort of trading strategy is equally important in the market volatility of this nature. And most of the occasions you would have noticed that during the weekend or during the changeover of the day, they try to gain the levels or lose the levels very quickly. And later on, they just trade around those new levels and confuse the traders whether we can take a sell position or whether we can take a buy position. And if you try to take a buy position, you might be thinking we are trying to take a buy at a higher level. Or if you try to do a sell position, then when you look into the chart, so 1.23 could be the resistance, then one can take a sell there. So that is how it will just avoid the traders to take any sort of decision in the market. But our way of trading is very simple, that we look into that of the live market code page and see where the market is. If the market is near that of the low and not cut the low, then we try to take a buy position. The market is near that of the high and not breach the high for more than 30 minutes from our time of observation or from the start of the session. We try to take a sell position and keep stop at entry once the position makes profit. Not any level, only near that of the high or near that of the low, we try to take position. Thereby, our positions easily give profit. It will give opportunity for us to keep stop at entry. And in case if the market suddenly reverses, we may not lose anything and we may only lose the position. So this should be the objective. So whatever be the forecast or whatever be the type of analysis, try to use the trading strategy as a prime or the most important thing in earning successfully from the other market. The consistent earners always use the trading strategy. They stick on to that of style of trading and use hedging or anything or a stop to limit the risk, and they try to maximize the profit by using a trailing stop or just carefully watch and close the positions with profit without any greed. And these are all the important in the mindset one should develop in order to become a successful trader. Even a new trader who can develop it in a matter of 1 month. And it is not necessary that all the time they have to say that I am a newbie, I am a new trader. So it takes some time for me to understand. That means you want to learn it in a hard way. Then there is no need to listen to that of the experts, and you can just make a trial and error method and find how exactly you are able to fit into the market. Then lose little bit of money, and subsequently after blowing about one or two accounts, you realize, okay, this is not the way to trade. So instead, you learn it from that of the experts, but don't think that all the ideas given by that of the experts might be suitable for you, because your equity and the time to trade and your trading platform, these three are very important for you to design your trading strategy. If the trading platform does not have the hedging, then there is no point in listening to a expert giving an idea about how to use the hedging. Similarly, if your usable margin is very limited, then a trading expert giving an idea of average trading may not work for you. So obviously you have to choose the right type of trading strategy, and also try to see that you are not taking unlimited risk in the market. So these two are vital information one has to imbibe. Only then they will become a successful trader. And in the case of CHF, 1.154, 1.1450, 1.1253 are the current level, 1.1438 is the low, 1.1494 is the high. The net change is 40 pips negative. When Euro has gained about 64 pips, CHF has lost only about 40 pips. You can understand that they do not want to drop CHF. No, instead they wanted to gain the levels here. That is why less drop in the case of CHF and more gain is seen in the case of Euro. Similarly, in the case of Euro and GBP, almost 64 to 62 pips gains are seen. So as a result, Euro GBP is almost holding around that 0.8331 is 0.8334, 0.8316 is the low, 0.8359 is the high. So you find a narrow range swing and the net change is nominally 8 pips positive. In the case of Euro CHF, 1.39 area, 3940 is seen, 1.3916 is the low, 1.3962 is the high. The net change is 22 pips positive because of a lesser drop in the case of CHF. So you can understand that they wanted to gain the levels in the case of CHF more when they drop less in the case of Euro. As a result, they will be holding at every level and try to gain the level with little bit of downward stop in the case of USD CHF. Now coming to that of the Canadian dollar, they have dropped it, and now you find that negative net change of 21 pips is seen. It is hovering around that of 1.03 area, making a brief downward stop and showing a psychological level of below that of 1.03, and subsequently they want to gain the level. That is why 21 pips negative net change is seen in the case of Canadian dollar, when Australian dollar has gained about 57 pips. These two are the commodity pairs, Canadian dollar and the Australian dollar. So you can understand that the denominator currencies, they wanted to gain the levels significantly in this particular week. So calmly watch and trade. Then in the case of USD yen, they have just made again a narrow range swing, all along on last week, they have been trading below that of 91.62 to that of 90.22, 91.22 or 90.86 and things like that. And subsequently, they gained the level, but still short of 92 area. And so here you find the net change of 26 positive net changes seen. It is a contrarian move. Because of that, the N crosses was gained initially the level, and you find the positive net changes seen in the case of the N crosses, and they are expected to make a downward stop and then make the rise in the case of the N crosses. You know very well that weak beginning false move, they will try to do it. And today, for the weak beginning false move, they just opened flat and made a little bit of lower level consolidation and gained the levels. So that was the weak beginning false move. We'll be able to understand how exactly they are able to confirm it by tomorrow, whether the downward move is a weak beginning false move or an upward move is a weak beginning false move. So accordingly, the rest of the week you can take positions and trade depending upon the trend they set for the week. Now let me focus the camera over that of the PowerPoint presentation. So what is expected today? During the Japanese session, lower level swing and quick rise. So quick rise has happened and they are expected to close the session near that of the high. Then during the European session, they are expected to make a brief upward stop on higher level swing and then slide towards close of the European session. So that time, if you want to take a buy, you can take a buy during the slide towards the late European session. So between 12:30 and 13:30 GMT, or from 12 to 13 GMT, you can try to take a buy position near that of the low when they come close to either an intermediary low or near that of the low what they are set for today. They come to that of the intermediary low, then wait for 30 minutes from the start of the session, US session, then try to take a buy position during a downward stop when they come closer to that of the low. In case if they are not coming closer to that of the low and hold around that of the lower level and not breaching those intermediary levels up to 14 GMT, then you can take during the around that of the middle level a buy position. Then they are expected to breach the high and go above during that of the US session. The US session rise will be very, very slow and it will be a slow gain rise or a slow and consistent rise during that of the US session. And if you use the trailing stop, it will not be hit. You can keep about 30 pips trailing stop and you will find the market swings about 10 pips and gain about 20 pips, swings about 10-15 pips and gain about 25 pips. That sort of moves will be seen. A slow gaining move will be seen during that of the US session. Okay. What could happen tomorrow? Tomorrow, it is again expected to make an upward gap opening and quickly gain the levels during the Japanese as well as the European session, and little bit of profit booking will be seen during that of the US session. So I have given the forecast for today as well as tomorrow for the benefit of those who want to do little bit of position trading, holding the position for about 1 or 2 days and try to earn from the market, because now the going will be good for that of those who are doing buy and sell trades. Then, but you should not buy during that of the rise. You have to buy during that of the drop. Then only you will be able to earn money from that of the market. During the rise, if you buy, that could be the highest level buy you would have done. Probably next day only you will be able to book profit. And in spite of all the decision making, still use the stop or the hedging order to limit the risk, because the players can do wonders for us and they can straight away reverse the market, telling so many stories. So don't think that the fundamental or the technicals or any of the analysis will be perfect and it will give an 100% return for our trading. And always think that market means risk and it can give any sort of risk at any given time, and we cannot be negligent in handling the positions. And once the position makes profit, at least keep stop at the entry. Then Euro, the low is 1.2109, which is intact. The high is also intact, 1.2207. These are all the initial lows and the highs set between 2:30 and 3:30 during the start of this particular week. So normally between 2:30 and 3:30, they form the initial highs and the lows and try to hover around that of the high and as well as the low during different sessions and try to make a downward stop and below that of the low or upward stop and above that of the high. That is how they make the moves in the market. So only when they are near that of the initial lows or the highs, if you try to take a trading decision, you will find the position makes profit very quickly. Then in the case of GBP, 1.4546 is the low, and from there about 50 pips gain is seen. 1.4612 is the high. They breached the high and formed 1.4614 as the new high. So GBP is not expected to drop during that of the European session. Keep that in mind. They will straight away gain the levels, another 50 pips to 100 pips in the case of GBP. They have reached the high, and during that time they could hold euro or make a little bit of swing around the current level in the case of euro. Then subsequently they may rise euro also later on. So as a result, I am expecting euro GBP to come down. So when they rise euro more and not rise GBP, when they rise GBP more and not rise euro, then euro GBP cross is expected to drop. So this is how you have to relate the majors and with regard to their net change and try to identify what could be the possible moves in the case of cross. Then in the case of USD CHF, 1.1438 is intact even though market is trading near the low. 1.1451 is the low. Net change is 39 cents negative. So as I explained that they are expected to gain slowly the levels when there is a small drop in the case of euro. They could gain significantly in the case of USD CHF. The high is 1.1494 which is also intact. Yen 91.62, 91.94 are the lows and the highs and they are intact and they want to make the subdued moves today. But still they are making contrarian moves. When euro and GBP have gained the levels, USD has also gained the levels. So that is mainly to handle the crosses, yen cross. So they could make a gain and a quick drop in the case of yen crosses and again gain the levels later on by making contrary moves in the case of euro GBP as well as USD yen. So as I explained that euro GBP they are expected to gain more when compared because they cut the high and not in the case of euro. So GBP yen could make a significant gain today when compared to that of euro yen. This is how you should be able to derive your analysis and later on see how exactly it happens. And if it goes wrong also, we have got our trading strategy to protect us. The Australian dollar 0.8511 is the low which is intact and the high is 0.8568 which is also intact and which is making only about 50-55 pips swing here. Currently, it is holding near, Australian dollar is holding near the high 0.8560, short 8 pips short of the high. So we can watch till close of the Japanese session to understand how they are taking up the commodity pairs and accordingly we can decide with regard to the majors because we know very well the commodity pairs normally lead the market and lag behind. Then Canadian dollar 1.0299 the low which is intact. Market is holding near the psychological level 1.03 area and they make a downward stop but after 2:30 they are not cut the low and they are expected to go above that of 1.0345 area quickly when there is a small dip in the market. So they could create a bullish field by rising GBP, but they will be booking profit a little bit in the case of euro and also in the case of CHF and yen, and then later on gain the levels aggressively in the case of the majors. So let me just minimize the PowerPoint presentation and take up the questions which I asked here and focus the camera over that of the live market quote page. There was a remark at the beginning before the start of commencement of the webinar. Francisco, in case of more recovery from euro and GBP, do you expect USD to resume its uptrend after some wild swings month end? I'm not envisaging a significant gain in the case of USD uh, by month end. And as you notice that slowly they are gaining the level. And during the course of this particular week, we have to see how far they are gaining the levels in the case of Euro and GBP and other denominator currencies as well. Then accordingly, we'll be able to estimate whether they could make any alternative ESD gaining moves or not. And normally when the trend is set during the second week or the third week, they are expected to continue the trend till end of this particular month. And next month again the other majors are expected to gain the levels more aggressively when compared to that of this month. So I'm not expecting the USD to gain in a very big way against the majors. Intraday, obviously, there will be up and down moves in the case of Euro and GBP. That we cannot call it as the USD gaining and the USD weakening move. They are all nothing but the up and down moves of various majors and the denominator currency. Rob, if they are planning to rise denominator pairs, then they will drop or slide majors. See, it is not always like that. As you see now, they gain the levels in the case of USDN from that of Friday and also gain the levels in the case of Euro and GBP. It's a contrarian move. When they are capable of making such contrarian moves, what do you think that whenever they rise denominator currencies, they have to drop necessarily numerator currencies? So when you have a strong mindset of that nature, then anything happens in the market against your view gives a surprise for you or confuse you to take positions in the market. So don't think that they have to necessarily go by the fundamentals that either they have to do the USD gaining move or USD weakening move. They can do USD gaining moves in one or two pairs in the case of majors, and they can again show more gain in the case of GBP, less gain in the case of Euro also, and say some stories. And if you believe the stories, then it will appear it is really correct. But actually, they are trying to do such variations in the moves, mainly to bring in action in the case of their respective cross. And in the case of denominator currencies, whenever numerator currencies drop, for example, Euro dropped on Friday and GBP also dropped significantly on Friday, and USD/CHF did not gain much. Is it not a contrarian move? They are holding USD/CHF and they are holding USD CAD on Friday. So don't always keep in mind that sort of rigid ideas that they have to, whenever they drop Euro and GBP, they have to rise USD/CHF and USD CAD. It's not mandatory at all. Then floor. Which direction would be the false move for the Euro? Euro just a lower level swing until the gain has been seen, and let us see how far they are holding the low today and also tomorrow. Then you yourself can confirm whether the rise was a false move or a drop was a false move. I want you to judge. But according to my forecast algorithm, the low set now is a false move and later on they are expected to rise. But we have to read the market by observing the market for about 1 day or 2 days, understand which one is a false move. So now we are convinced that they make false move. But only thing is which way they have done the false move. Still, you need to focus on that in order to determine whether that drop was a false move or a rise was a false move. Once you inculcate that particular idea or how to perceive it, then you will be able to master the market. Then yes. What is the focus for Australian dollar for today and tomorrow? Australian dollar, as I said, that it is expected to lead the rally to start with. So already it has started leading the rally and has come to 85 area. And when everybody was talking that it could go below that of 0.80 area, it has come up and see how far they are gaining it. And already you see that they have come closer to the high and holding here. You find the quotes are in black. That means they are not removed the orders. So that they are not removed the orders means they are buying. If you sell to them, they are willing to buy here. So obviously they will make at least an upward stop on before dropping. So otherwise they can consistently gain the levels also. And they can give attributes from that of gold or anything, but don't trust it. Gold is expected to drop in this particular week. Then Arun, do you expect GBT to come closer to the low? Today I'm not expecting, as I explained in the case of GBP. They may just go below that of the psychological level 1.46, but they may not drop significantly in the case of GBP, as they have done already on Friday and bought it. And anybody who has taken a sell position on Friday, they give profit booking opportunity for them. That is not at 1.47, around that 1.46 or below, and or 1.4540 or things like that. If they have taken a sell and the players have given the profit book, if they are giving the profit booking opportunity for them, then obviously the short covering will not come during the day. Then you will find that market could drop further. So obviously the players may not give the profit booking opportunity for the short sellers of Friday, and they could gain slowly the levels. That is why you find that they are holding firmly around 1.46 and they cut the high. That is an indication. Initial high they cut and they are holding around that. We just see whether that indication is true or not. Then Jimbo. Even though GBP cut the high, if it stays below the initial low, does that not mean that it will drop in the coming session? Yeah. Okay. When they have cut the initial low and the high is very important. During the start of the session, if they cut that, then it is a stop point. But they initially set the between 230 and 330, they set the initial lows and the highs. Subsequently, afterwards, if they cut the high after 330, that means it is signaling. So you should be able to differentiate that, please. See, you have to keep in mind one important thing. The players will not keep their strategy very, very complicated. At the same time, like our statistical analysis or fundamental analysis, technical analysis, things like that, because that sort of analysis, if they try to focus on, then they may not be operating the market 24 hours because they have to make the market swing. That is very important. So obviously they don't go for such in-depth analysis. At the same time, they don't make their analysis too simple for everybody to read it. So you should be able to read them carefully when they consistently repeat such exercise and then understand, okay, this is how they are trying to play with the traders. So there comes your mindset to understand other man's intentions. So if you develop the mindset to read the other man's intentions, you become a successful trader. When a client comes to your shop and asks for a commodity and things like that, you should be able to read perfectly whether he is going to buy or he has just come here for a window shopping or just play around and things like that. That sort of reading is very essential in order to have a transaction. This is one of the basic skill set required whenever you enter into a business or a market. Then Rob, you have taken the initial low today at 1.452, which was at the GMT time 230 and 330, not at 230. Yes, no, they formed the low and the high even before that, but after 230 and 330, they don't breach it. Okay, then they sustain it. Then subsequently they breach to indicate. So you should be able to understand. Normally they make the upward stop and the downward stop and 30 minutes from the start of the session. Afterwards they don't cut it. But because it is a day, between 230 and 330, they find it a convenient time to set the initial highs and the lows, and the other counterparts join in playing in the market. So they have to pass on the message, okay, what they intend to do, but we have to read it, uncode and read it. The low you are referring to GBP that I said, and was at 2045 GMT. Then how it was between 230 and 330. Probably if you go into that of the charts, it will look like 2045, please. And In the chart, whenever such levels are shown just a fraction of a second, it will just discount it as a noise, and wherever it is predominantly traded, and those levels will be shown as the bottom or the low of the candle. And if you look into the tick chart, you'll be able to identify it. Still the price action, what you come across here, you should try to take it. Up to 330, if the low is there, and that is the low for the day. And the low, uh, based on the reference low, they are trying to act on it. See, it is not my rule, it is their rule. So whatever they use the rule, I am just interpreting it here. And if you try to question it, probably you try to explore and find all other possibilities of reading their intentions. I have no comment on that, please. Then grow. Will the low of the day be set in the US session? So you mentioned as an intermediate low at European session. No. If I understand your question correctly, probably they will set again the low, or they can come closer to the low during the US session. That's what you mean. I'm not expecting them to come closer to the low during that particular time. Only during the late European session they could come, and in case they form the low, intermediary low, and stay around there till close of the US session, then probably they may have to make a false move during the start of the US session. So when they drop, then the traders could make a sell position. Initially they may buy when they dip about 10 pips, then subsequently they will just drop another 20-30 pips, hit their stops and go above. So this you have to watch it. I am not able to foretell what exactly could happen. It all depends upon the traders commitment. So as you read, that is why I am giving the updates in the blog. As we proceed with the day, we will be able to identify what they are trying to do. But the forecast algorithm try to give a overall picture for the day or the week or the month. But still we have to fine tune it by using the market reading. And still it may not be perfect. We have to use the trading strategy. That is what I insist upon. So I will read the market from time to time and give the updates if there is any variation from that of the original forecast given. Hope you are able to understand that. Then grow. Will the low be cut in GBP and Euro? Now, at the moment, I am not expecting it. As they proceed, we have to see how far they are going to handle. If suddenly all the traders jump into the market and take buy positions for breakout trade, then cutting the low could be very easy for the players. So we have to keep it in mind how the traders are going to behave. If the traders take more and more of a sell position when compared to that of the buy position, then probably the market could go up further. So the strengthening and the weakening of the market depends upon the traders' pending position or the traders entering into the market. So these two things are very important. If the traders become bullish and turn long, then probably the market will correct. The traders become bearish and sell, the market just gain the levels. And Eric, what do you expect with yen crosses? Yen crosses they have nominally gained the levels in the case of Euro yen and GBP yen. And today GBP yen, I am expecting them to make a brief dip and gain more when compared to that of Euro yen. That's what my forecast says. So we just watch whether it is coming true or not. What is the forecast for the US stock market? US stock market are expected to open little lower and then gain more during the day. Then drop. Do you think that they might take Euro and GBP to new range higher by end of this week? Yeah, probably. You will find slowly they will gain the levels without changing the mindset of the traders, and then suddenly make aggressive gains during the last week. And we have about 2 more weeks to go. This week 14th to 18th, then 25th to 25th another week, then 3 more days in this particular week. I mean the third week from here, and 28th to 30th, and 1st and 2nd. So you come across a week in which the month end as well as the new month begins. You will find more and more volatile moves during that time because of the option expiries or futures derivative market handling. So we can find that the players could take that advantage and try to gain significantly in the case of Euro and GBP. But still, we'll keep our fingers crossed and see how far they are making the moves in this particular week. Then from there, we will derive the market for the next week. Then Jason, what is your view about USD CAD? USD CAD, I am expecting them to gain the levels in this particular week. And because of that, they are making lesser drop and more rise from today. Eric, since there is no news at the beginning of Euro, we should expect a false move that time. I mean, during European session, I suppose. Yeah, they will definitely make some false moves during that of the European session, before the European session starts, if there is no news. So, and that will also give us the clue whether they are going to rise or they are going to drop. See how we will be able to derive every 30 minutes depending upon the news and depending upon the price action and how they are handling it near the high, how they are handling it near the low, whether it's a false move, a stop one, or an extended move. So it should not be difficult for us to read the market. Only thing is we have to apply our mind in reading it rather than trying to get ourselves confused and diverted with various other attributes. Then he asks, what do you expect about Australian dollar yen? When they hold Australian dollar near the high for so long and not make a new high, is it possible that they could make us think that it is time to buy? Not necessarily. And when they hold near high, probably intraday we can do a sell and buy trade when the high has not been cut for more than 30 minutes of your observation or from the start of the session. But they opened higher from that of Friday close. So anybody who has taken a sell position on Friday and watching now will come for a short covering to start with. Then definitely they will make an upward stop and towards the close of the session, and that will indicate us whether they wanted to gain the levels in the case of Australia. In case if they do not want to absorb any this level sell, see they are holding it in 85.60, 85.63 for a prolonged period for nearly about 20 minutes during our observation. So it has become black. That means they have not removed the order. Now you find an improved green order. And if they are willing to buy, obviously they are not fools to book loss. And they will gain the levels and just give it at a high level, only then they will profit. They are smart enough, understand that they have got the money power. And they can also probably misguide us, holding high that, okay, Australian dollar is not going to fall below that, and so traders could make a buy. Probably that sort of buy will come from the short sellers at the lower level. They will do that. See, always when the market gains about 3 levels, or 3 successive stages of rise, the first rise will be done by that of the players, induced rise. Then the second buying will come at the higher level will be from that of the short seller. They will out of panicness try to cover their short. That is why the market aggressively gained the level. The third level of gain will be from that of the same emotional traders who have gone short. They try to turn long in order to get back their lost money, and they try to buy it. And the players also facilitate by quickly gaining the levels and move, and they gain the levels and offload positions. And the traders will try to buy at that time, or sometimes the traders might enter it as a breakout trade. Later on find that if they are not booked the profit, they are incurring loss. So you always come across these 3 stages of market behavior. And these, after the third stage, if we try to take a highest level buy, sell, or a lowest level buy, you will not be hurt. So this is what time again and again I am repeating. Probably if you understand well, then you will not ask this sort of questions. See, you have to first of all remove the uncertainty from your mind, and whatever the players try to do, you should write try to understand rather than telling, okay, this is what the player should do. Because what do you think, the players may not be able to receive that information. And they act based on the commitments of the predominant of the traders. Because they have a very clear objective of making money from that of the emotional traders. It is not that they do not want other traders not to make money. If the traders trade along with them, they will not be able to arrest them. Still, they will try to prevent them maximizing the profit by making volatile moves. During the gain also, they will quickly drop and then gain. So if you use the trailing stop, then they could hit your trailing stop and go up. So you need to identify that during session changes, you have to make the trailing stop and a static stop, and then after the session stop, you can make it again as a trailing stop. And this sort of strategies you need to adapt in order to improvise or maximize your profit. So obviously it does not come just like that in a theoretical form, and you have to imbibe that habit. You have to imbibe that trading style. Then you will be able to do it at ease without referring to the book. It is like writing an examination. It is not an open book examination. Just refer to the content and then reproduce it in the answer papers, etc. It is a closed book examination wherein you should have imbibed all the information and inculcated that and developed your style of trading. Then it in practice. When you are putting it to practice, try to do it in a demo trading platform. Don't think that it is small to do trades in demo trading platform, or only after losing all the money you have to do it in a demo trading platform. This is the question of exercising your mind and perceiving the market in a right direction or with a right sense. So you can try it in a demo trading platform. When you are able to really inculcate that particular trading style, and you are able to read the intentions of the players from time to time, and you are able to control your emotions, you are able to keep stop at entry in any of the positions you have taken and try to maximize the profit in such positions. You develop the skill set, then go into that of the real trading account. There is a difference between a demo and a real trading, because you know pretty well in a demo trading the carelessness will be there. Don't try to develop the feel that you are doing trades in a demo trading platform. Then you will probably do it casually. You may not be able to really learn it. You do it in a very sincere way, like a mock trade. You try to do it or do a paper trade in a very serious way, and see that this is the prelude for your becoming a successful trader. Just like that, you cannot become a successful trader just because you have understood what all I explained or what all other experts have explained to you. You have to imbibe them, and that should come into your practice instantaneously. Whenever there is a change in the trend of the market, whenever they are making quick moves in the market, you should be able to read it properly without becoming an emotional trader. What is the percentage of success rate of 30 minutes rise? Rule, cutting new high and rule. Rob, again, you estimate it because you are going to, because I had done the back testing. I found that nearly about 90 to 95% is successful. But just because I am telling it is 92 to 95% successful, if you try to use it and you may not find that success rate, you do it during different time and find how exactly you have to use it. Then you will find that 92 to 95% success rate will come. During the gap time and during the session start, just like that, as soon as you open the trading platform, try to grab a position and try to apply 30 minutes rule and things like that, it may not work. You have to watch the market more time and trade during lesser time, or take only lesser time to finish your trading. And that sort of attitude you should develop. Then you will find the 30 minutes rule is really working very well. Then Koya's 52. Use a 10 minute GBPS chart so I can see what's going on to happen in Australian curve. See, these are all referred as the correlations. So correlating GBP with regard to Australian dollar, fine. And if you are able to take a trading decision, you use it. And in case if there is no consistency with regard to such relationship, when exactly that correlation is going to deviate, if you are not able to identify, then using such correlations could be dangerous. A similar correlation could be comparing the RSI with the MACD and things like that. When the divergence comes, then immediately you think that, okay, market is going to make an intraday reversal and things like that. They are all nothing but a correlation of two different type of analysis. When you try to correlate that sort of analysis, if it happens to be a coincidence, then it may not work all the time. If it is a perfect correlation, it should have a consistency with regard to the correlation. There should not be any change with regard to correlation. And if you find any such thing, correlations wherein there is a perfect correlation, then you try to use it. Otherwise, when there is a divergence, we obviously miss the bus. Similar to that of the guidance, it can misguide you vulnerably. Then don't use such analysis. Then Arun, did you say that upward stoppant in GBP in Japanese session? I said rise. And they are done already an upward stoppant, or they are done already breaching of the high 1.4612, and they formed a new high 1.4614. It is a signaling for further rise in the case of GBP. That's what I said. Then, do you expect USDN to cut the initial low? Yeah, there is a likely chance that USDN could just drop and then rise again for the week. And today they will just gain the levels, and if you see that they come closer to that, the low high 9194 and holding closer to that. And when they normally just cut the high and then drop, during the midweek, they come again a little bit of lower level and try to cut the low. Then afterwards, gain the low. See, somebody who has taken a buy position on Friday, happily holding that, okay, now yen will go to 94. Let me wait without keeping stop at entry. And when he has bought it around 9130 and things like that, the players are able to read that and try to hit the stops and then go up. So that sort of downward stop on times one can buy. So last week the downward stop on levels were below that of 91, and now the downward stop on levels will be below that of 9130. Whenever they show 9130, 9135 below that, you try to buy, then you will come across significant gain within this particular week. Hope you are able to understand what I am trying to tell you, how to relate the markets in a long term. So for the week, comparing with the last week and comparing with that of the last week high and low. Because if you are totally involved with regard to the market, you will find all the levels will be in your mind. And automatically, there won't be any reference required. And that sort of sharpness we have to develop it if you want to become a successful trader. Then grow. Will the opening gap be filled? See, there is no necessity to fill the gaps and things like that. Please don't have that mindset that they have to fill it all the time. See, there are a lot of short sellers around those gaps. Then you know that there are certain levels or certain range. I call it as a non-trading zone. They just breach the level afterwards. They don't retrace it to that level at all. They will trade it only once intraday, and subsequently you will find that the market trades above, and that particular range they would not have just retraced it. So don't always keep in mind that they have to retrace the levels. Then only you will come across disappointment, or sometimes there would have been a very good opportunity to enter in the market out of fear of that retracement. You would not have entered into the market. So that is why, when the retracement comes at 38.2% or 68 point levels and 50% retracement or 61% retracement, there are various types of retracement calculations. And nobody will be able to say, okay, it's going to be only about 38% retracement is going to happen or 50% retracement is going to happen. It is a post-mortem study that market has retraced about 61.8% or 137.3% like that. So it is a question of post-mortem. And nobody will be able to say, okay, market is going to retrace up to 50%, afterwards it is going to reverse. Have you ever heard any technical analyst giving of that nature? So always keep it in mind that post-mortem comments are of no use for your future trading, because you have to commit now and then take profit in your positions rather than just doing a analysis of what has happened on Friday. Friday happened is over. That's all. The market is gone. Afterwards, a new trading areas have come. New trading ideas might have come in. So don't try to fall on something. No, if it does not happen, then you find it difficult. So it is not necessarily always the market has to repeat a similar moves, and probably the players can make similar moves, but market need not repeat similar moves in all currencies. Meaning is, there is no necessity to market to obey any of the technical rules all the time or any of the fundamental rules all the time. But the players can make similar moves for 1 or 2 days, and the third day they can reverse. You understand? That's what I trying to convey. Okay, let me go back to that of the PowerPoint presentation. The expected forecast, lower level swing and quick gain or rise during the Japanese session. They could go closer to the high during the European session, higher level swing and then slow slide during that of the European session towards close of the European session. At that time, they could come to that of the middle level between the high and the low. When they come, then don't jump into that. Whether it is a third level drop to identify. Otherwise, wait for the first 30 minutes of the US session and see where exactly the market is. And if it is not still testing the low, then you can take a buy position so that it would become a safe buy and sell trade. Otherwise, if you want to do a sell and buy trade, after the gains during that of the European session, watch how far they are gaining it up to 10:30 GMT. Then try to take a sell position. During the slide, you can book profit. So either way, trading opportunities prevail on a daily basis. It's a question of identifying those areas for either a sell and buy trade or a buy and sell trade. That based on the analysis I explained to you, you can derive. And also I'll be giving all my readings in the blog, and you can just go through the blog again and again, and if there are fresh updates and things like that, or answering to that of the relevant questions which are asked, then if you don't find the answer what you require is not posted there, you can ask your questions. I'm willing to answer to that of the specific questions rather than the levels. So don't ask for the levels, because I have found that when I give the levels in the market, in the blog, invariably you develop the mental block with regard to the levels. Nearby that level, you fail to act in the market. That is why I either give the range or just give the market expected moves. Then accordingly you can plan. And still it may not be 100% perfect. There could be an error in my reading. Keep that. It is a human limitation. And so you use the trading strategy if you are committed to the market, and try to see that you are not hurt badly. So I take this opportunity to thank FX Street and also you for your patient listening. And this being recorded, and it will be pasted or it will be placed later on in archives. You can go through that in case if you join late or in case you have not attended this webinar. And tomorrow again I'll come and present the Asian session live market analysis between 5 and 5:30. I request you to come back. Thank you, one and all.